The housing market has been red hot lately, with most houses selling for more than asking price, many for all cash. The typical home asking price hit another new high in May 2021 by reaching $380,000, an increase of 15.2% compared to last year, according to Realtor.com. According to the National Association of Home Builders, lumber prices have skyrocketed nearly 250% since April 2020, causing the average price of a new single-family home to increase by nearly $36,000. Why listen to me? Because I've run a business for 30 years. I made my first real estate investment 34 years ago, so I'm not just some 25-year-old who made most of his money making YouTube videos. So what does all this mean for somebody right now who wants to buy a home? If you're a first-time home buyer, will you be doomed to a lifetime of renting apartments? Or will things eventually settle down or even crash to new lows? According to the National Association of Realtors and Home Buyers and Sellers Generational Trends Report, millennials make up the largest share of the home buying population at 38%. The older millennials, aged 30 to 39, making up 25% of that, and younger millennials, aged 20 to 29 years old, making up 13%. These younger consumers are mostly buying first homes, 86% of the younger millennials and 52% of the older ones. According to Bloomberg, not only are millennials buying homes, but their starter homes are often multi-million-dollar homes rather than the traditional humble first property. Glenn Kelman, the CEO of Redfin, posted 14 amazing statistics on his Twitter feed, and I want to share them with you today. And if you're watching this on YouTube, please click the like button below so YouTube promotes this video. Many thanks. You can also click the subscribe button so that when more videos come out like this, you'll get notified. So here are the amazing statistics revealed about the current U.S. housing market and what you should do about it. The Redfin CEO says in his first tweet, "It's been hard to convey through anecdotes or data how bizarre the U.S. housing market has become. For example, a Bethesda, Maryland home buyer working with Redfin included in her written offer a pledge to name her firstborn child after the seller. She lost. Number 2, there are now more realtors than listings. Number 3, inventory is down 37% year after year to a record low. The typical home sells in 17 days, a record low. Home prices are up by a record amount, 24% year over year to a new record high. And still, homes on average sell for 1.7% higher than the asking price, another record. Number 4, but in 2 of America's largest cities, inventory has increased. In New York by 28%, in San Francisco by 77%. San Francisco hasn't had an inventory increase this large since 2008, and still in both markets, prices are increasing. Number 5, in 2020, new construction permits were down 13% in DC and New York, 40% in LA, 48% in Chicago, 50% in Seattle, 79% in San Francisco, and permits were up 25% in Miami, 56% in Vegas, 96% in Greenville, 122% in Detroit, and 246% in Knoxville. By the way, the top 5 states with the highest annual appreciation were Idaho, 23.7%, Utah, Arizona, New Hampshire, and Connecticut. The states showing the lowest annual housing appreciation were Hawaii, 4.7%, Louisiana, Wyoming, North Dakota, and Mississippi. Number 6, lumber prices are up 300%. So it's not toilet paper that people are tearing out each other's hair in the aisles of the store, it's a piece of wood. Number 7, in Redfin's annual survey of nearly 2,000 home buyers, 63% reported having bid on a home they hadn't seen in person. Now this kind of makes sense. The virtual tours make sight unseen purchases more viable. Until Apple develops scratch and sniff computer screens, it just won't tell you if an opossum died in the attic. Number 8, in an April survey of 600 Redfin users who had relocated the past year, about 2/3 of the people who moved got a house of the same size or bigger, but about the same proportion, 2/3, spent the same or less on housing. Now it really makes sense. Lower interest rates and moving out to the suburbs where houses cost less and working remotely both lead to lower monthly expenses. Number 9, even though most of the people who moved got a bigger home, 78% reported having the same or more disposable income after their move. Idaho home prices could still triple and seem affordable to a California. Think about it. The median household income in Boise is $31,508. In New York City, it's $107,000, and in San Francisco, it's $114,000. So imagine working remotely from a house next to a potato farm and making Bay Area money. Number 10, for low tax states, 4 people move in for every 1 who leaves. For Texas, this ratio is 5-1. For Florida, 7-1. In The Guardian, it says 2 households are moving out of California for every one that's moving in, says Mark Perry, a professor of economics and finance at the University of Michigan, who has been studying U.S. migration for many years. U-Haul is pricing based on the imbalance they see, and now they have a truck shortage in San Francisco. Trucks going from Phoenix to San Francisco were only $311, but those going the other direction cost $2,500, roughly 8 times more. He checked and saw similar numbers for Californians, including Texas, Washington, and Nevada. Number 11, this migration to lower-cost areas may lead to lower workforce participation. For many families Redfin has relocated, the money saved on housing costs lets one parent stop working. A wave of Redfin customers are now retiring early. Number 12, lenders are calling employers to confirm that the home buyer will have permission to work remotely when the pandemic ends. Rates are lower for loans on primary residences, and the lender also wants to make sure that the borrower actually plans to work after getting a loan. Number 13, the average housing budget for out-of-towners moving to Nashville was $720,000, 50% higher than the locals' $485,000 budget. It used to be coastal elites who worried that every adult in the family had to win a career lottery just to afford a home. Now that feeling may spread. Number 14, it's not just the income that's K-shaped, but mobility. 90% of people earning $100,000 per year expect to be able to work virtually, compared to only 10% of those earning $40,000 or less per year. The folks who need low-cost housing the most have the least flexibility to move. Now think about it. If you work as a landscaper or at a restaurant waiting table, well, unless they develop drones where you can sit home mowing somebody's lawn or bringing a Budweiser to their tables, working remotely just isn't an option for them right now. And by the way, what is a K-shaped recovery? Think about it. In March of 2020, the stock market absolutely crashed in just about all sectors. But part of the economy boomed. For example, technology, online retail, and software recovered quite rapidly. That's the portion of the letter K that goes up and to the right. Then other sectors really struggled, didn't they? Travel, public entertainment, hospitality, food services continued to decline. And that's the portion of the letter K that goes down and to the right. Okay, so what does this mean for the future? And should I buy now while I still can, or should I wait until the market cools down? And number 15, an investor recently said, with an ancient touch of awe, but also agreed, that one source of America's miraculous economic recovery was the bounty of the land itself. We have more room to grow than we ever imagined. We just have to make sure that everyone benefits. And that's true when you think about it. Unlike Hong Kong, Macau, Singapore, there are still millions of acres of habitable land in the U.S. In addition, more owners are putting up homes for sale this year, as a result of which record high share of homes for sale are new listings. At the same time, these homes are selling fast, with a time on market being 32 days shorter than this time last year. This means that while the influx of sellers will help relieve some of the competitive pressure buyers are facing, they still need to make their offer strong enough to beat out a multiple bid scenario. Freddie Mac predicts that home prices will rise by 6.6% in 2021, slowing to 4.4% in 2022, which is getting closer to normal. According to a 2020 survey from the National Association of Realty and a new study by Realtor.com, buying is more cost efficient than renting in a growing number of the largest cities in the country. This is encouraging news for the millions of millennials who are approaching peak home buying age. Now, the current housing shortage is also due to the moratorium on foreclosures, but it's mainly because of home builders not keeping up with long-term demand growth. Single-family housing starts rose last year to 991,000 units, but builders would need to construct between 1.1 million and 1.2 million single-family homes a year to meet the long-term demand. The last time the single-family housing market broke 1 million was 2007. The good news, in 2021, the Mortgage Bankers Association forecasts single-family housing starts to surpass that at around 1.13 million. And that could be just the beginning, as projections going forward are even rosier at 1.17 million single-family homes in 2022 and 1.2 million in 2023. New home builders will ramp up production to help relieve the shortage of inventory of homes for sale throughout the United States. The added inventory would no doubt aid buyers in their search to secure their dream home, while also helping ease the price increases throughout the country. So, should you wait until later to buy? What are the mistakes to avoid and the things to do? The statistics say the following. Number one, the answer is as long as you don't go too crazy, you can go ahead now as long as you pay off your debts first. Don't have credit card debts, student loans, car payments, etc. Pay off your debts first. Hey, housing adds a huge burden of extra expenses. You don't want to turn yourself into a stress monster by adding new debt on top of debt. If you can afford the monthly car payment, you can also afford to put that much in the bank each month and pay cash. Somebody said, but hey, my interest rate is 0%. Who gives a rip? You probably paid top dollar for the car whether you know it or not, so there's your interest rate. You get a better deal if you pay cash, and better yet, buy a 2-year-old reliable car instead of a new one. So first, pay off your debts is number one. Number two is slow down. Have patience. Nobody's going to come and gun you down if you don't buy a house tomorrow. And as we said, Freddie Mac predicts home prices will rise by 6.6% in 2021, slowing down to 4.4% in 2022. That's not going to kill you. So have patience until you find the right house that fits your needs at a price you can afford. Number three, plan for the long term. Buy a house that you can live in for at least 5 to 10 years. The longer the better. The longer you live there, the greater your chances of making a profit when it's time to move on. Number four, interest rates are at a historical low. They're only going up. So that's something to take into consideration. Number five, while you're waiting, save as much as you possibly can so you can make a bigger down payment. The bigger your down payment, the lower your monthly payment, so save up. So that's what's going on in the housing market, and that's what experts say should influence your decision about buying a house now as opposed to waiting. Thanks for watching. Please click like, subscribe, and share this video. This is The Business Guy.